now. Taiwanese index down 115 points. We have Hang Seng, which is sitting with cuts of around 1.5%.
And a very strong finish in for the full year in terms of deal wins too.
Resistance, of course, is the 22,275 mark, which is actually coming in.
Well, the 22,200 mark becomes extremely important. And I'll tell you why. Because the 22,200 put has the highest open interest on the put side.
We worked hard to get here and we'll work hard to stay here.
We have mostly in the manifesto seen continuation of existing schemes.
Nifty Bank is down about 0.75%.
Spiriva continues to do pretty well, so the new conversions are close to about 31-32%.
We had guided 205 crores of PAT. We revised that in December to 220 and we ended up at 226.
Nifty Bank also not much compared to the Nifty, but still down 1%.
To 0.53% as compared to around 0.2%.
We have a very competitive spectrum portfolio.
Day in the red, 170 points lower on the Nifty.
Well, that's the day so far, and it's been quite a red kind of a day through the course of the last many hours. And as we begin the last hour of trade here on closing bell, the market slipped a bit more. We're down full 200 points. This is closing bell. We're coming to you from the CNBC-TV18 News studios. I am Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi. Good afternoon.
Good afternoon. That was Prashant. You saw there making those phone calls, figuring out, what the buzz is in dealing rooms and why is this market not buying. But actually, we don't know whether the second dip gets bought or not. But yeah, it's a bit tricky. After Friday, this is another tricky session.
Well, that's right. You thought that you were out of the woods when you saw the bit of a bounce coming in closer to around the 20 DMA. But that's not to be, because the second round of selling has come about. But I have to note a couple of positives in today's trading session. You pull up the Nifty, you pull up the 20 DMA. And you'll see still we have defended that mark. So that's point number one, 22,263. That's the low of the day. So that's point number one. And point number two is at least you have more than 400 stocks that are advancing. At one point of time in the first hour of trade, there were only 150 stocks that were advancing. And that crisscross line actually so apart that picture is not, you're not getting that picture. But actually, at one point of time, there were way more stocks that were declining in comparison to advancing. At least that gap has narrowed a little bit. Maybe by the end of trade, if you could see the advances number pop up to 600, 700 odd, the bulls will feel, well, we had a decent session. On the headline index, we got hit. And some stocks did well from the broader markets as well.
Absolutely. But Prashant, overall, I think the market has had a lot to deal with, right? On Friday, we were talking about taxation issues. Over the weekend, there's far bigger sort of global geopolitical risk that's on the minds.
Yeah.
And I guess the market's taking note of it now.
Yeah, but I think the market in any case, even before geopolitics, etc., was looking a little iffy. And, not just here in India, but in the US as well. In India, we've had minor small corrections. In the US, we've had nothing, right? And that is the reason why the US, by the way, the S&P, for example, is now trading. Actually, you should look at the S&P E-mini futures as a more liquid contract. That's now trading very close to its 55-day average. And that typically is indicated, a break of that has indicated a bit of a pullback in the past. So, overall, many indices were looking kind of ripe for a bit of a sort of sideways move, maybe a little bit of a pullback. Will we get that, or once again, it's going to be short-lived, shallow? That's the question, really. We are once again, as I said, as we approach get into the last 60 minutes, really, getting close to the 20-day average. So 22,270 is the 20-day. As of yesterday's close, we're about 30 points above it. The intraday, of course, that 20-day was broken on the downside for a brief bit by a little bit. And then, of course, there was a strong bounce which came through again. By the way, the Nifty Bank on Friday, Nifty had already broken the hourly averages on Friday, and then we're looking at the daily averages. Bank Nifty had not broken the hourly averages, which has happened now. And here, I think with about 200, 250 odd points below from where we are trading right now, supports, etc., start to come in. So a lot to track here as we get into the thick of things. But market breadth, I think that is one indicator. Our declines outnumbering advances by some 4:1. The last I checked, as Nigel said, the number was 10:1 in the morning. So there is some improvement which is set in. Surabhi.
Oh, absolutely. But the way the screen is looking right now, it's a complete sea of red. There's no sector rotation. There's no leadership, barring Reliance, by the way. And that stock's going to be critical in determining how we ultimately close up. Reliance is pretty much a lone ranger trying to negate a lot of this downslide that we're getting. And then a few of the commodity names. Once again, it's ONGC, Hindalco, some of the commodity stocks that are up and about. Otherwise, the Bank Nifty is leading the decline with a 1.5% drop. Technology hasn't exactly lit up the charts after TCS, even though those margins were better than anticipated. But I guess it's the commentary. It's not really inspiring much on tech stocks. So tech is weak. Other large names like Lever, L&T, nothing really is firing for the bulls today. And I really would want to see what we get by way of FII numbers today. Because if you remember, on Friday, there was a massive 8,000 crore rupees of sell. A lot of it was negated by domestic institutions. They bought, 6,000 crores. But if the selling continues to be as huge, then, will it be fully absorbed or not by domestic institutions? Those are the questions that we have to consider. So I'm watching out for the FPI number quite closely today.
Well, that's right. And just a couple of banking names. CSB Bank, see what a beautiful chart that is. The stock is up close to around 5% in a market that's actually seeing a lot of selling pressure. I think that it has a fair bit of exposure to gold, and that's got something to do with this kind of up move that we're seeing. The stock is up close to around 5% now. We had the management who joined us, Mr. Mundal, I think a week or so ago, and he sounded very, very optimistic on business. And he's been maintaining that tone for the last few quarters as well. In today's trading session, the stock is up 5%. Remember, the Nifty Bank is down 700 points. So if you see any names that are doing well, that to a banking name, it's definitely got a lot of interest, at least as we speak, in very, very high volumes on that front. But let's find out what do you do on the index, because we had a bit of a bounce. That bounce got sold into. Mitesh Thakkar is with us. Mitesh, what do you make of today's trading action on the Nifty first? Do you believe that we want to go ahead and test lower levels? And what would the trade be first on the Nifty and the Nifty Bank?
Good afternoon, Ajit. I think that's the view. One, we had a gap down. Two, the gap down was closer to the support level of 22,250, and therefore we had a bounce back. And I was mentioning this that, the bounce back should be sold into levels of around 22,400, 450 range. And we got a high of around 22,422. So the gap is not filled. We are back to, the lower end of the day's range. And we got selling around the intraday averages, which is closer to about 22,450 mark. So I think the market should most logically test lower levels. The downside could be 22,180 to about 22,150. That's the first level. But eventually, if we break those levels, we might head a bit lower as well. So the structure is weak. So I'm not trading on the long side. We're trading with clearly some kind of short bias. And on the stock side as well, I have sell calls on Birlasoft. Bsoft is a sell with a stop just above 726 and a target of 680 can be looked at over here. And the other stock which I have is a sell on Granules, which I would recommend selling with a stop at about 418 for a target of 390.
Okay, all right. Thanks a lot for that. Mitesh, we'll keep coming back to you as the hour progresses. By the way, a couple of these larger cap names have seen some bit of buying. Mahindra and Mahindra pull up the intraday chart. The stock was down close to 2% earlier today. That's seeing some buying interest. The stock has just moved into the green as we speak. And Maruti Suzuki is the other one as well that's seeing some kind of buying interest from lower levels. So that one as well holding in the green with a gain of around 1.3%. Also good to see some of these stocks. But the one that's really bucking the trend and the one that's the top gainer on the Nifty is ONGC. It's buzzing today on the back of a positive note that comes in from Jefferies, which has initiated coverage on the stock. Sonal joins us to fill us in with more details. Sonal.
Well, yes, Jefferies is quite bullish on ONGC. They have initiated a coverage on the stock with a buy rating and a target price of 390 rupees a share. They say that the reforms in the crude oil market and the gas market have improved substantially in Indian context, and ONGC's profitability is now above its decadal averages as well. They're seeing strong free cash flow generation from here on, and also net debt reduction, which of course will be positive for their balance sheet as well. Also, the valuation is not capturing the growth prospects that the company is looking at, and it is still trading at a steeper discount to Nifty compared to its long-term average, and that is what makes them like the stock as well. They expect ONGC's domestic production to return to growth from FY24 to FY26. We have been seeing a decline in the production levels. They reckon that KG Basin production will be profitable despite higher OPEX that the company will have to undertake, and this is something which is seen in their financials already. The OPEX number higher due to the KG Basin reforms. They're building in 1% production growth over the next 2 financial years without assuming a resolution in ONGC Videsh. They're also talking about a consolidated net debt to equity, which will fall from 0.32 times to 0.16 times over the next 3 financial years. They have a buy rating with a target price of 390 rupees a share.
Okay, got that, Sonal. Thank you very much. ONGC indeed has been leading the charts today. It's very consistent. I mean, those gains are intact. In fact, stock seems to be building on them now with a 6% up move. Deepan Mehta, director at Elixir Equities, is with us on the show today. Deepan, good afternoon. Great to have you on as always. So ONGC, I guess it's, it's good going. Crude oil prices have jumped 15-16% so far in just this calendar year alone. And you perhaps just heard the Jeffries view there. What's your own take on ONGC?
Yeah, so good afternoon and thank you for having me on your show. I think ONGC certainly is a value play, but look at the track record last 15-20 years or so, it's not created any value for shareholders. And from that point of view, you want to be circumspect. At any point of time, you can justify a buy in ONGC, but what actually happens is that the numbers, when they come through, I think 2-3 quarters, they are good, then something or the other goes wrong. And there's earnings volatility and the numbers don't come up to street expectations. So therefore, the stock's multiple has remained pretty much depressed. But yes, I think oil prices have gone up, and let's hope that ONGC is able to keep most of the realization because there's also government interference in terms of taxation as to, this windfall tax also can come from time to time, and that may impact the earnings. But I am not convinced about the volume growth of ONGC. They've been talking about a volume growth on the gas and the oil side for many, many years, but that has not come through. If that were to happen in a significant way, then I think the stock can be in a different zone. But if that doesn't happen, then I think you could have a trading rally, but it's not a great long-term investment.
Okay, all right, got that. Deepan, I wanted your view on a couple of other names. I was just highlighting some of these automakers are seeing buying from lower levels. Mahindra and Mahindra, you had Maruti Suzuki as well. Any view out there?
Nigel, good afternoon. I think it's more to do with the expectations of very good quarter for the entire auto industry across the board, with the exception of perhaps tractors, and that too standalone tractor company. But it's absolute blue sky scenario for the auto industry. The kind of average realization prices have gone up because of premiumization. Quality prices are still under control, so margins also will be higher. Volume growth has been pretty decent for these companies. And, the waiting list is gradually dwindling, which means that, 2-3 quarters down the line, you could have slowing down of growth rates. But for the time being, I think March quarter, June quarter will be the best ever for the auto industry. And that's the reason why we are seeing, I think, pre-result buying taking place. And valuations also pretty much reasonable. To an extent, there's some more under ownership also if you exclude Maruti. And that's what's benefiting these companies per se.
All right. Deepan, just coming back to you, Aster DM has had a fantastic run, right? Today, I think it's off about 50 rupees from the day's highest point. But it's still got about 7% on it. The board's approved a special dividend, 118 rupees a share. This is at the higher end of what was expected by the street. We had the management with us earlier on as well. But let's just put this in perspective. Ekta is joining in with that. Ekta.
Yes, absolutely. Aster DM is in focus because they've approved that special dividend of around 118 odd rupees per share. That is after they sold their Gulf business for over $907 million. So that's what they've netted post the transaction. And the company, remember, had indicated that this special dividend would be between 110 to 120 odd rupees. So it's at the higher end of that particular range. And that's probably what the street likes. Record date is April 23rd. The board is not going to consider an interim dividend now, but they may consider a final dividend in their Q4 board meet. Now, the company says that 80% of the proceeds that they've received will be used for special dividends. So I think the street likes the fact that they have, rewarded shareholders quite handsomely. 1,050 crores will be retained by the company. They will decide how to utilize that 1,050 crores. Most of the hospitals for them are now mature and hence cash flows are coming through. So that's an additional positive. Now, remember, promoters have a huge amount of pledge in the company itself, but they do have plans on reducing it. The management did mention that the promoter pledge will reduce soon. We don't know to what extent and by when. They are open to expansion in terms of an inorganic route as well. So totally, they're looking to expand their bed count to 6,600 in the next couple of years and probably take it to 10,000 in the next 5 years. They want to become one of the top 3 integrated healthcare companies in India. So that's their aim. They're looking to expand beyond their core South market. So they're looking to expand in Maharashtra and UP, etc. Now, remember that Olympus had sold a certain amount of stake in the company, around 10%. They have 10% left. They said that it was picked up by FIIs and DIIs, and currently Olympus is retaining that 10% stake. They're growing at 25% CAGR, hoping to grow around 15% CAGR in the next 3 to 5 years.
All right, Ekta, thanks very much for that. So that is Aster DM with what's happened earlier. This is the management, Nitish Shetty, CEO of Aster DM Healthcare. We spoke with him earlier on. Some sound bites.
80% of the sale proceeds will be dividend out as a special dividend at 118 rupees per share, and around 1,500 crore will be retained within India. The future of the 1,500 crore, how we want to use it, will be decided in the near future by the board. Because as I speak now, we have clear-cut plans for our expansion in terms of deploying 1,700 beds in 3 years. This we are going to do with our own internal accrual because we have enough cash flow happening because most of our hospitals are matured now. For inorganic growth, we might consider this retained amount of 1,500 crores, or we might leverage on a share price, which is doing well, as you are aware now.
All right, that is the management of Aster DM with some perspective. A news flash at the bottom of the screen. So the India-UK FTA, the free trade agreement, which is being negotiated for the last couple of years. There is an update there, and talks are set to resume in May/June of 2024. So basically, from next month onwards, the talks will resume, and talks are being planned in Brussels. One of the major areas which basically is led to delays and kind of agreement has not been possible is liquor, import of the fact that UK, the industry wants access to the Indian liquor market in a much more substantial way. And United Spirits has been one of the stocks, which is, of course, actually has been the #1 stock there, which kind of gets excited whenever there is news around the India-UK FTA, etc., which starts to come through when we talk about it. But it's not just that; it'll be a whole range of products because it'll be a comprehensive FTA. Parishad has been reporting on the story, and others have been doing so as well. So that is United Spirits at this point in time. Deepan, just a quick word on, if you want to comment on Aster DM or this or United Spirits, if you want. United Spirits, of course, had a decent week last week, but also Aditya Birla Capital, AB Capital. Macquarie came out with a note. This was early last week, saying it's the top pick in the NBFC space, where is one of the few remaining diversified lenders in the NBFC space after Bajaj Finserv. There is by the way, the reason I'm asking that is because tomorrow there is a press conference, AB Capital. The management will be there, and the promoter, Mr. Birla, will also be there at the press conference. Just your thoughts on AB Capital as well, apart from the others you may want to comment on.
So Prashant, let's start with Aster DM. And until the point that they sold the Gulf business, this company had been a laggard compared to its peer group. And I was in fact quite bullish on the company because of its Gulf business. But that also never really performed to our expectation or to its true potential. And now that they have sold it and provided a huge value unlocking opportunity for shareholders, I must commend the management on that. And 80% of distribution of those gains back to the shareholders is really very friendly from their point of view. Let's see how the domestic business now shapes up and whether they're able to start to outperform in terms of underlying growth or the larger peer group companies. So from that point of view, I'm going to just wait and watch. The second company you spoke about was Aditya Birla Capital, and it's at a discount to a lot of the large diversified NBFCs like, say, Bajaj Finance or Cholamandalam for that matter. And gradually, I think that gap is narrowing. It's a conservative lender, so from that point of view, it has survived the last NBFC crisis pretty well. But then growth rates have been lower and lower than some of its peer groups. So if growth rates were to improve and their collection efficiency to remain stable, then the street will start ascribing a higher and higher P multiple. But nonetheless, I think if you're underweight NBFC and you feel that Bajaj Finance and Cholamandalam are on the more expensive side, then certainly I think there is a play in Aditya Birla Capital as well. And there's value unlocking as far as subsidies are concerned. I'm sorry, which was the third stock you were discussing? I just lost that name.
There was Aster DM, United Spirits, and AB Capital.
Yeah, United Spirits, I think United Spirits is, how can we forget about it? But yeah, yeah, Nigel, you want to say something?
I think this is the extra market holiday impact that's playing out. But yes, please go by. We're all yours. Let's get your take on United Spirits as well.
So, I mean, I like the products, but not the stock. I had invested in it for a long, long time, but the returns are always subpar and valuations are always expensive. And it's a difficult business, because there are a lot of state level controls on distribution, on pricing, and therefore, one quarter goes good, 2-3 quarters go bad. But it's a steady performer, and if you wanted to have an exposure to FMCG, I would still look at a company like United Spirits, or even better, I think United Breweries, because some relaxation on low alcohol content beverages like beer can be a big positive for United Breweries, and I think the competitive kind of play in beer side is little less than what we are seeing on the spirits side. So I would prefer breweries over spirits.
Good to hear.
I liked how he put United Spirits and Breweries in the fast-moving consumer goods category.
No, I like the way Dipan said, but he likes the products, but may not be the stock too much. Dipan, good to hear you still like the product because there's plenty of competition out there. Yeah? Look at Indri. Indri has clocked 100,000 cases. In just 2 years of launch, and it's occupying 30% of the market share here in India. So splendid stuff out there. More amount of variety, more amount of choice. Stocks aside, the variety for consumption is there. But let's discuss another stock with you, Deepan. Mangalam joins us to tell us about Concord because they released their quarter four business updates, and it appears in terms of the guidance, they've missed that. Mangalam, go ahead.
Well, the management spoke to CNBC-TV18 post their third quarter numbers, and at that point, the 9-month volumes were close to around 7.2%, and the management still was pretty confident of going ahead and doing 10 to 12% volume growth for the entire year versus the 9-month growth of just about 7.2%. At that time itself, looking at the macros, the street chose not to believe them, and now the numbers are here for us and they've missed those estimates. So total volumes of the fourth quarter grew at 11.2%, EXIM volumes 9.7% and domestic volumes 16%. Quarter on quarter, this is an improvement in terms of their volumes, but it's below their expectations or below their own guidance as well. So for the full year, total volume growth guidance was 8.2%. The company's volume growth guidance was 10 to 12%. The company's reported 8.2%. EXIM volumes 8.2% growth versus target of 10 to 12%. Domestic volume 12.3% versus target of 15 to 20%. So there has been a mild miss on their volumes, but the good part here is that they have been on a recovering path. And going forward, it'll be very interesting to see whether volumes come by with the DFC coming on stream, etc. or not, is the question. And the second thing that we'll be watching out for are the internals. Apart from the volumes, how much of that is double stacked? What have been the curtailment of losses that they've done due to empty running? And the operational details with realizations would be important to watch in the numbers. But as of now, as far as the volumes are concerned, they're below street expectations, though improved in the fourth quarter.
Okay, all right, Mangalam, thanks a lot for that. Deepan, I wanted your view on Concord. The numbers looked a little bit disappointing, but as Mangalam said, the street would have thought at the end of quarter three itself, they're unlikely to meet that guidance that they were putting out. I was lucky with regard to this double stack, single stack. I visited Gateway District Parks in Delhi, and I had a chance to actually see how things work out there. Quite interesting to see how things shape up for these companies going ahead. But on Concord, because that's obviously the much larger player, what's your view on Concord?
Again, another company which has not performed up to street expectations, perhaps below its potential. Maybe there are PSU constraints, and we've been hearing about this dedicated trade corridor making a big difference to increase in container traffic and how that would benefit Container Corporation. But so far, it's not visible in the numbers. I think they really strive to get to double-digit kind of volume growth, which is what can get us interested in the stock. And when you look at the entire spectrum of logistics play, I would say that there are better plays. You mentioned Gateway District Parks, and you could even add Adani Ports to it, where I think we are seeing significant growth rates and valuations. I think are still on the reasonable side. And I think that as far as privatization of Container Corp is concerned, I think that's looking more and more remote at this point of time. So I would just put Container Corp on hold. And wait for a couple of quarters when you see significant volume growth because of perhaps change in underlying fundamentals or something structural has taken place, and then look at buying Concord. But yes, Adani Ports, Gateway District Park, I think those are interesting stories one should certainly track as and when EXIM trade starts to pick up in true earnest.
Okay, all right, Deepa, and at Gateway Distriparks, at least since I was tracking that company when I visited, the valuations are half of Concord. Concord trades at more than 25 times EV upon EBITDA. Gateway Distriparks trades at around 12 times EV upon EBITDA, but a much, much smaller player. Yeah, Prashant.
Absolutely. Just want to highlight the market, which is now under 22,300 once again. So this is as we head into the last 40 odd minutes of trade. And look at something like a Vedanta. From it's basically lost about $15 from the top. From 385, it's down to 368, 369. So that's a bit of a knock which Vedanta has taken. But of course, you've got to look at the fact that last fortnight or so, it's been up some 25%. So in a very short time span, a pretty large move and a bit of a pullback. We'll take a break. We're back. Nimesh Chandan, CIO at Bajaj Finserv Asset Management, will be with us on the other side. Stay tuned.
Welcome back. Well, the markets are under pressure, but let's focus on one company from the telecom space. Vodafone Idea announced its FPO. The company plans to raise around 18,000 crore rupees via this process. Reema Tendulkar quizzed the management during a press conference on their 5G rollout plans, the tariff hikes, and other important issues. Let's listen in to what the management had to say.
Our plan is to roll out 40% of our revenue coverage over the next 24 to 30 months. So that is our plan, let's say, for the next 2.5 years. We have all seen how 5G has evolved, and generally we will be calibrated in our 5G investments as we progress, because it is important that we deploy 5G where it makes sense. But in terms of an overall target is 40% revenue coverage over the next 2 to 2.5 years.
Okay. On tariff hikes, since that's one of the major drivers for ARPU increase, when do you think we are likely to see a tariff hike, and your own expectation of how much are we going to see? How much can the industry absorb? The market, sorry.
So I would say that in terms of timing, unfortunately, I cannot give you any guidance at this point of time. I can only allude back to the factors which make the need for tariff correction very important. First is, as I said, India has amongst the lowest ARPU amongst major economies in the world, 1/3 of China or less than 1/3 of China. Secondly, none of the operators in India are returning their cost of capital, and you heard commentary from peers as to what is the ARPU level needed for getting to a place where you can cover your cost of capital. We are way below that. The third is that ARPU will increase just by way of upgradation. So on the point of tariff, difficult to say when it will happen. We have some expectation. I cannot mention that here right now.
But your own internal expectation, do you think it's likely in this calendar year after elections?
Unfortunately, it's a valid question, but I'm constrained not to be able to answer that at this point of time. In terms of size of increase, I think you have seen what kind of increases have happened in the past, and I would say that should be a reasonable way to think about it.
How much of, what about Industar's receivables? Have you earmarked, from the fundraise, how much will go to pay off Industar's receivables?
So I think we have given the details of the utilization of funding. Part of it is for CAPEX, part of it is for spectrum payments. There's an amount which is under general corporate purposes, which we can use as per our discretion. But you would have also seen the RHP that we cannot use the funds for making any payments to promoter or promoter group companies, and that would be the governing factor.
Okay. Just one more question. Just doing the math, if once the moratorium comes to an end in the second half of FY26, the math seems to suggest that it will be difficult for you to meet the obligations. What is the government's thinking on the way forward, since they are the single largest stakeholder? Is there a possibility we will see some relief from the government? Maybe the moratorium gets extended.
So let me answer that, and if Sushil or Ravinder want to add anything, I'll request them to do so. Fundamentally, if you recollect the reforms package which was announced in September 21, the government had provided for that the installment series which is arising out of the deferment of 4 years, which will start after September 25, as per the reforms package, that can be converted to equity by the government. So I would say that we plan to pay the government installments out of our cash generation. However, there is a government support available in the form of the reforms package, which states that some installments or whichever can be converted at the government's option. So the government support exists in a way there.
But that will entail a large dilution, converting some of those installments into equity.
So let's say that today the government is at 32% shareholding. With this issue making certain assumptions, they would get to a 24% shareholding. You can do your own calculation, but our rough sense is that if that conversion were to happen, they will probably not exceed the levels, or they would be in the ballpark of the levels where they are today. So I don't think that is a cause of concern for us.
Well, that's Vodafone Idea talking about that mega follow-on public offer that the company has launched, and what it will mean for, of course, the firm getting a fresh equity lease of life, and the government's own interest and its own equity stake in Vodafone Idea. Well, let's stick to some more stocks that are in focus today, and Senco is one of them, which has been buzzing right from the morning. It's still retaining a gain of almost 18% after the Q4 update came in, and it looked pretty good. So, Mangalam, I guess the street is liking it, and maybe also, given what we've seen, I mean, I'm not comparing at all, very different animals, but what Titan did, what Kalyan Jewellers went on and did, and maybe now all hopes and eyes on Senco.
Well, you know, ever since Titan and Kalyan Jewellers reported their quarterly updates, Senco was a stock which was doing well already. It was a 720 rupees stock which went into the quarterly update 800 rupees, and now as we speak, it's rallied all the way up to 950. So a lot of the organized jewelry players to do better this time around for a couple of factors. One, the industry is shifting from unorganized to organized. Shift has been accelerated by the increasing gold prices itself, and that's something doing well for them is the fact that apart from a 39% growth that the company has reported, which is backed by over 20% store sales growth, the studded ratio for them has improved. All the others are seeing 0.4%, and that typically does well for their margins. And earlier, they would not increase the stores at the pace that they have done in the fourth quarter and FY24 itself, all thanks to some of the money that they've got during the IPO as well. So 20 exception. So all these factors working well for them, along with 13% gold volume growth and 19% diamond volume growth in F4, with the management saying the first quarter of FY25 looking extremely strong with the recent things looking well for Senco, and the discount that it trades at versus say a Kalyan Jewellers or Titan was also high, and now I think to narrow.
Okay, got that. Mangalam, thank you very much. Clocking close to 13 rupees. Yeah, 30 is 20 paise. The high that we saw was earlier year, and the high took Vodafone Idea almost up to 17. So, Deepan, just some closing thoughts. Vodafone, and given everything that's going on, the company's renewed trust in terms of getting equity, promoters infusing some money, and now this FPO. What's your sense? Would you look at buying? And I know it's not for the faint-hearted, but would you look at buying Vodafone now?
Well, I think there's going to be speculative interest in the IPO and what price is going to come, and that may provide a bit of an arbitrage. But I think with every passing month, it's becoming clear that Vodafone will survive, and that's great news for its consumers. And even better news for Indus Towers. And stock, of course, Indus Towers is reflecting that optimism. But on a fundamental basis, you can't buy Vodafone unless they start to, really report profits and kind of report financial numbers which are in line with its peer group. And maybe if they have a few more such fundraising, and if the RPU also starts to move up, then it will reach that particular zone where it is really profitable and a value creator. But from a fundamental perspective, it's better to just wait and watch. But yes, I think once markets stabilize and how this IPO plays out, there could be some amount of trading bounce in Vodafone. And as I said, there's an opportunity in the IPO as well.
Okay. As the management was saying, how much is going to be the conversion, if that is required, all the loans, etc., which have been given, how much will they be able to repay over a period of time when bank lines, etc., open up post the FPO, and what will be the conversion and the dilution for non-promoter, non-government shareholders, etc., that is unknown at this stage. A lot needs to go right for this one to work, but yeah, as you said, lots of interest around the FPO. Thanks very much, Deepan. Great to have you with us here. Nimesh Chandan is with us, CIO at Bajaj Finserv Asset Management. Nimesh, good afternoon. Good to have you with us here. Thanks very much for your time. Nimesh, so tell us what you and your team have been doing at Bajaj Finserv AMC. Markets have done very well, and it's been like a rising tide. And will the tide keep rising? Are we going to see a little bit choppy waters here? What's your sense?
Good afternoon, Prashant. Good to be on your show. Well, at Bajaj Finserv AMC, we've been bullish on the equity markets, and we are seeing the trend play out. We measure the markets on two different parameters. One is on the fundamental basis, and we also measure a behavioral or a sentiment index, which tells us the direction that the market mood is. And we find that at this level, Nifty is close to its fair value, not overvalued. The small cap and the mid cap space are about 20 to 25% overvalued. And in terms of the behavioral index, we still see positive signs. So we believe that at least the large cap space can continue to drift upwards even from these levels, despite the concerns that we are hearing for the last 2-3 days.
Nimesh, hi, good afternoon. Would love to hear more about this behavioral indicator. We don't discuss it that often. Usually we stick to, discussing price to earnings, price to book, just pure valuation metrics. So tell us, what do you mean by this behavioral indicator, and why does it give you the comfort that perhaps there's some more upside to this market?
So this is a study we've been doing for quite some time, and now we have a back data of about 20 years on how this index works. The idea is that markets, like a pendulum, don't stop at its fair value. They don't stop at the center. They swing based on optimism and pessimism. Sometimes numbers create stories, sometimes stories create numbers. So people get involved in the market with emotions, and we need to gauge which side this pendulum is moving. And typically, when people are bullish, they express it in terms of price action in certain asset classes. Like, for example, a simple way would be like, the action between small cap and large cap. It tells you whether the market is bullish or bearish. In terms of government securities and corporate bonds, whether markets are more keen to pick up, say, the spreads in the corporate bonds versus government securities, or DMs versus EM. So we have about 16 different data points that consolidate into this behavioral index. And this index has been right 75% of the time in the signal that it provides us. In fact, we launched a balanced advantage fund on the basis of this index. And right now, so the index gave a bull call in April of 2023 and continues to be on the bullish side even currently.
You got the bottom right, I guess. April 23 is when, this fantastic rally really began last year.
No, absolutely. In the broader market, right? Mid cap and small cap, the move really began. By the way, the market's at the day's low now. So just a quick point there. So 22,263 was the low. We're at 22,268 as things stand right now. And it's interesting because, just take a look at where the largest pressure is coming from. It's banks mainly. If you can have ICICI Bank and HDFC Bank, between the both of them, that's about 80 index points gone. So that's the bulk of the pressure at the day's low, ICICI Bank, and a similar will be the case for HDFC Bank as well. You look at the other ones, of course, are TCS. TCS, of course, is under pressure, down 1.5%. Infosys, which will report this week, that's down as well. It's adding about 10-12 index points. There's a few others as well. But I mean, this is the bulk of where the pressure is really coming from. There's only actually two names, ONGC and Hindalco, which are doing anything of sort of meaningful sort of pulling on the other side, lifting on the other side. Otherwise, it's down and out. So 22,266, very, very close to the morning lows and just below the very short-term moving averages, which is the 20-day average, which as of yesterday's close was at about 22,270. I mean, a kind of decisive close under it will start to open up more downsides, at least in the very near term. That's been the experience. I mean, it's acted as a very good indicator for the short term, at least. Nimesh, what would you do in terms of sectors and sort of preferences, and what you would be bullish on, where you would be cautious? Give us some color.
So let's take market segment by segment. We are seeing more opportunities in large caps compared to mid and small. So the risk return payoff is better here. Although I would also say in the same breath that the market cap of the company doesn't tell you anything about the wealth creation opportunity in that company. So for example, today, if at our fund, we get an idea which is a good business and a good management at reasonable valuations, we won't reject it just because it's a small cap company. But as a category, there seems to be more better risk return payoff in the large caps. In terms of styles, we believe quality is a style where you see actually a good contrarian bet can be taken. So companies in the quality side, which have good cash flow, good return on capital, some of them which have underperformed for last 3-5 years are at a cusp of a turnaround. Some of them could be in the consumer side, some of them on the chemical side. Some of these sectors which have not performed or contributed are likely to see an upturn. There are already green shoots in these segments, and we are taking some of the contrarian calls in these sectors. Now, regarding some of the export-oriented companies, possibly the first half of the year is a bit soft. Maybe we start seeing some recovery in the second half, and specifically in the fourth quarter, we should see some normalization of business there. Because globally, we are seeing some kind of a downturn, but hopefully in 6 months, we see a soft landing and bottoming out of these sectors.
Okay. So those are sort of some ideas that you're working with. I was just looking at some stocks that are moving right now. And now one of them that really catches the eye is Ashiana Housing, 16% up in a weak market, decent volumes as well. The market cap of this company is closer to 3,800 crores. And what seems to have gotten the market excited is the fact that they apparently sold out all of their 224 flats in a Gurgaon project in a matter of 15 minutes. Now, that's Ashiana Housing for you, and that's the real estate market for you. Nimesh, what are your thoughts? I mean, true to form, a lot of these companies of all sizes, all hues, they have been reporting very good sales numbers. The stocks have also moved up. How are you looking at real estate and the ancillary plays?
Real estate is actually in a very good cycle. We are seeing an uptick in the residential bookings. So we are, I think, at close to the all-time high in terms of bookings, or probably just crossing that. On the commercial side also, if you see in India, we've seen a lot of these co-share, co-workspace sharing companies picking up large chunks of good real estate. And also a lot of MNCs picking up, say, commercial spaces in the country. So real estate is, I think, in a very sweet spot. We should see continuation of this good time for the next few years. As a house, we are also looking at some of the ancillary plays that come when real estate starts moving. So this is one sector that is good for the economy. It impacts several other sectors. So we are looking at companies, say, in the pipes, tiles, faucets, so all the ancillary plays that come, including the ceiling fan, AC, everything. So maybe from here on, we will see some kind of a downstreaming of activity and business going there. Some of those companies are positioned with good brands and good valuations.
White goods, right? I mean, durables, basically, where there could be some interest which comes back. Chemicals, Nimesh, did you touch upon that? That's a contrarian call, right? That you guys are making. So is it agri-chemicals, is it specialty, bulk? Sorry, go on.
So one of the first, I think, houses who came and said that we are positive on chemicals. We are seeing signs of bottoming out. We've been talking to companies looking at different segments. It's a large space, chemicals. We are seeing definite signs of turnaround and sequential improvement in business as well as prices. Some segments, for example, agrochemicals is still a bit slow, but dye chemicals and pigments, specialty chemicals, they are all seeing a good turnaround and we should see some sequential pickup in them. The good thing is market has been not expecting much from these companies. They have been underperformers for quite some time. Though some of them have very good return on capital and good growth plans, they have been lingering at the same level as last 3 years and maybe at the lowest valuations they were in the last 3 to 5 years. So this is a very good area to go fishing. You'll find more fishes and less water.
That's good to hear. That's good to know. So I guess that's the pond to be in. Good conversation, Nimesh. Thank you very much. We hope to see you more often on the show. Really appreciate you taking out the time. Well, with that, let's move on and bring in Nimesh for D-Street chatter, because the street has been reeling under pressure throughout the session today. Nimesh, lots of sort of weakness, and the second dip, that's been a little more sort of overbearing.
Yes, Abhi. So, at day's low, but again, the biggest worry for the market seems to be the geopolitical risk, and that's clearly weighing on the investor sentiment. And so, in fact, I spoke to some large investors, and they all seem to be alluding to this fact that if this gets escalated, you probably will see a further sell-off in the Indian market. So, that's going to be a big event to track, at least in the near term. That's the overall feedback. From an institutional point of view, again, a mixed day. We saw a big sell-off on Friday from the larger FIs. It doesn't look like there's going to be that large a number, but still, they potentially could be on the sell side. But within that, I guess the only large cap space which has been well bid are the PSU names. Selective buying continues in the PSU basket is from a flow perspective. From a sector point of view, again, metal has been the sector of this series, continues to be outperforming even in today's market. On the other side, IT is under pressure, even though TCS reported good numbers, and banks have been a big drag as well, especially the large private banks in today's market. So looks like there is an FI angle to it. Some bit of sell-off clearly there from the larger FIs in the financial names. A word on the overall broader markets. While the Nifty mid-cap index has recovered from the day's low, it's still down 1.5%. A lot of stocks do recover, but again the feedback seems to be one needs to be very, very careful, because if this geopolitical risk takes off and it gets escalated, you will see sharp sell-off in the broader market. So that's a word of caution out there. But clearly, from a larger HNI and large investors' point of view, the geopolitical risk is a big event to track, at least in the near term.
Nimesh, absolutely. What about stocks? What are you picking up?
Well, Prashant, in terms of individual names, the first stock is HUL. Within the FMCG basket, this is one stock which is under pressure, largely on sell flow. So there is a very strong sell flow from larger FIs. So expect high delivery volumes, and looks like some larger FIs seems to be active sellers in HUL today. The second stock is HEG. In a weak market, HEG is buzzing in trade, not only today, but if you look at this month chart, the stock is up 34% and been a big outperformer. In fact, I understand a domestic mutual fund has been an active buyer of late, and the city is anticipating a corporate development as well in HEG very soon. So that's the trigger for the stock to outperform. The third stock is Apollo Tyres. Even that stock is under pressure, largely on sell flows, but also there was a Morgan Stanley tactical note. A couple of peer companies have reduced the tire prices, and there is going to be commodity inflation as well. So there could be margin pressure. So that's the reason why Apollo Tyres is under pressure. And the last name is SAIL. While the stock did fell from the day's high, under pressure today, but there are buy flows from larger HNIs, what I understand. Some large HNI investors seem to be quite active buyer as well in SAIL of late. So while the stock is under pressure, there is accumulation happening in SAIL in today's market.
Okay, got that. Thank you very much, Nimesh, for all the buzz and all the action that's coming out there on individual stocks as well. We will take a break on that note, come back on the other side and get you more in the markets, including, of course, a couple of calls with Mitesh Thakkar on the trading ideas that you can work with just before close. Welcome back. Well, you're with us on Closing Bell. As promised, let's get some final trades in. Given this week close, what's the advice? Mitesh is back with us. Mitesh, the final call now. I guess the second dip has been a little more brutal for the bulls. What are the levels that you would like to keep in mind and any final trades?
See, I think the banks have been hit more in the second dip. That's where the pressure is coming. So therefore, I think, we'll maintain a negative bias. And I have actually STVT on Hero Motors. It was a sell call a couple of days back. Even now, I think looks weak. So there could be continuation. So STVT here with a stop at 4,400 and look for a target of around 43.50, 43.40. And STVT on Berger page with a stop at 550 for targets of 535.
Market at the 20-day, Mitesh, again, right? So more downsides, as you were saying earlier.
I think, Prashant, you will have supports in a declining market. You will have resistance in a rising market. The idea is that the overall bias and the structure looks slightly on the negative side. So I would play probabilities, and I think there's a stronger chance of us declining rather than rising from here.
Got it. Thanks very much, Mitesh, for that. So more with Mitesh later, but 22,268 is where we are trading at right now. We'll welcome in Amrish Baliga, who's with us. Amrish, good afternoon. Good to have you with us here. Thanks very much for your time. We had Nimesh Chandan of Bajaj Finserv AMC. They were saying that they have a contrarian call on chemicals for a while now. Your pick is from the space, Anupam Rasayan. Talk to us about that before anything else.
In fact, I've also been positive on the specialty chemical space for a while. And basically, it's a contract call, which means one will require a lot of patience. And I think the whole story should play out over the next 2 to 3 years. But currently, my call is on Anupam Rasayan. But this is a next possibly 6 to 8 month call. Anupam Rasayan is among the leading companies in custom synthesis and manufacturing of specialty chemicals with a 40-year track record. They have about 6 manufacturing plants in Gujarat. And this CRAMS market is actually growing on like double digits, expected to grow in double digits over the next couple of years. Basically, the end user demand is increasing, and we have a China plus one story really playing out well in this space. And they cater to many multinational customers like Syngenta, Sumitomo, BASF, Bayer Crop Science, UPL, about 29 MNC customers across Europe, Japan, United States, Singapore, and India. And their focus is on fluoro-based chemicals. And in Q3, they had launched 6 new molecules, totally 11 new molecules in 9 months FY24 till December. But the Q3 numbers were a bit weak. The top line fell, but the EBITDA margins actually improved. And because of which the stock actually corrected decently well. And I believe this is a good opportunity to buy from the medium-term perspective as well as the long-term perspective, since the pipeline is extremely good. They have about 90 new projects in the pipeline, possibly over the next 3 to 4 years. And the management will bounce back in FY25. And I believe the EBITDA margins is sustainable at about 20 or 30%. I'm expecting an EPS of about 34 for FY26. And my medium-term target is much higher.
Okay, that's Anupam Rasayan, the stock of choice for Amrish. Just looking for some more names that are managing to buck the trend in this weak market. One is housing. Even Purvankara from the real estate space, by the way, is having a very good session. 9.5% up on Purvankara. Are bucking the trend in otherwise what is a very weak market. Amrish, hi, good afternoon. Any thoughts on some of these smaller real estate plays? Ashiana Housing, Purvankara, some of these stocks.
Clearly, it is on the demand, and most of them are able to launch their projects quite fast. And this is basically because if you see like the premium real estate, when I say premium real estate, it's because most of the CXOs and senior employees have created wealth over the last, especially 3-4 years post-COVID. Because if you look at the salary hikes, they've been extremely good. that, I think there have been decent amount of ESOPs, which most of the first thing that they do is upgrade the lifestyle, and they go in for premium properties. So if you look at the demand across, it is not speculative. It is actually end user demand. Prices, they have not really, moved up as much as what we have seen in the past. If you look at the way the prices have gone up from 2003 to 2008-9, today it's hardly seeing is real demand, and that is what is extremely good for the real estate companies. And if you look at the entities which are there, they are much more professional today than what they were about 15-20 years back. They are quite transparent, and I think that's what is giving them better valuations. Given the scenario.
Okay, Amrish, stay with us. We'll take a break here. There's about 7. Back, we basically will, with 6 minutes to go, looks like we're going to end pretty much picking up pace. Sources suggest that Tesla has been in talks with local businesses for social.
Thanks for that, Prashant. While Elon Musk's India visit is going to be very and therefore sources with direct knowledge have shared with us that Tesla, as well as various geopolitical tensions across the world, which have, and there is a new entrant, Tata Group's Tata Electronics, which is going any supply chain risks future. So that's what we are gathering. But remember that
for that, that's a quick update coming through. That's the CNBC-TV18 exclusive. All source-based information. Tata Electronics and chips locally for to Tesla as they start to sort of sell cars here. The ecosystem is the other one, right? Excite went through the roof and went in with that tie-up with 2 global companies. Your thoughts on this space and what's the best exposure?
Since Excite already has that thing going with Kia and Hyundai, I think the thing is Amaraja. So I think that's one to that's the one to be looked at. And at the same time, I think the other auto ancillaries which are linked to EVs, like Uniparts, you have Sona BLW, Samvardhana Motherson. I think these are the ones which I think could in fact benefit because of Tesla coming to India.
Amrish, L&T, I think was one of your, was it a pick recently?
It's been for a very long time and continues to be. Yes.
Okay. No, this city that the Saudis were building, right? NEOM. And the news that they've cut spend on it by some 95% or so. So I was reading a note by Kotak which was saying that, the sharp re-rating for L&T was largely driven by prospects of consistent growth in the Saudi business. And that seems a little uncertain now. Just wanted your thoughts here.
No, I think that's going to be more sentimental because the sort of order flows which are there, it's just not L&T. I'm talking of all the companies which are in that space. I think the order flows are much more, they can handle. So I don't think the Saudi project being lowered will really have a major effect on L&T's performance going ahead. But yes, I think immediate future, sentimentally, it can affect to a certain extent. And in case the stock corrects because of that, I think that's a buying opportunity, because if you're talking of the sort of infra growth in India, I think that's more than enough for L&T.
Okay, that's a take on L&T. And with that, we'll wrap things up. Amrish, thank you very much for being with us on the show today and giving us some perspective. Well, the market is pretty much ending at the lowest levels of the day, so there's no sign of buyers emerging just yet. Second day running, we've had a weak close. Friday was the first, and then it's been followed up by this Monday. So about 1% lower on the Nifty with a cut of 250 points. Banks and IT, those twin engines, really leading this spiral down that we've seen. The Bank Nifty is ending with a cut of over 800 points. That's over 1.5%. And the Nifty IT, if you pull up the Nifty IT, well, yeah, that's also down about 1.5%. So we talk about the losers tally on the large cap screen, and the names will reflect. ICICI Bank down to 2.5%. HDFC Bank down about 1.5%. Lever is one of the other big names, L&T and Lever, some heavyweights which were doing a little more damage on the downside. And then, of course, the IT stocks. Let's start with TCS, down 1.5%. The commentary not really enthusing the street, and the others as well. It's Peerset, Tech Mahindra, HCL Tech. Most of these stocks have had a weak session. So on large caps, just a few commodity names, Prashant, which managed a little bit of green, but otherwise it was a pretty widespread fall today.
Yeah, no, absolutely. And just a few other names here. But I have to say, though, that the list of volume-led gainers, even though it's completely one-sided, declines outnumbering advances, that ratio. But if you add one more element to that mix, which is volumes, and what went down in volumes, or the number of stocks which went down in heavy volumes as compared to the number of stocks which went up with heavy volumes, I mean, it'll be, you'd have to give it to what went up, because there, lots and lots of names with volumes doing well, even though, I mean, the aggregate number far smaller than what went down. So just a few names, right? I mean, Thermax, you had CPCL, Anand Rathi, we were talking about Ashiana earlier, CSB Bank is at $400, Purvankara, and then of course Exide, Aster DM, etc. Some of the other names that we've been continuing to discuss here. In the large caps, it's largely been just, ONGC and Hindalco. Otherwise, it's been more down than up, really speaking. So that's the picture with this Monday's trading session. Down 240 points lower, but the defensive 20-day, the 20-day moving average, hope floats that perhaps we'll be able to hold on to it. So 2 times the market's gone and hit that 20-day and then recovered. So the close is about 15 points above the 20-day moving average on the Nifty. It's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks very much for staying with us. But both Surabhi and I will get you markets forward. That'll come up after a quick commercial break. Don't go anywhere. Stay with us.
Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.